Hi, everyone. My name is Eduardo Guerrero, and I will be your moderator today. I'm a partner at Intercam Bank and managing director for the offices in the Baja, such as Cabo San Lucas, San Jose del Cabo, Los Barriles, and La Paz, and the office of Puerto Peñasco in Sonora. I am very excited to welcome you to our first webinar in English. After our presentation, we will have time to answer your questions. Please write those in the chat available to you in our webinar. During the past months, we have gone into learning mode, and one of the good things we have learned is that we can be close to our clients through technology, and to be close has been always a distinction of our service. So we learned that no matter where you are, we can still have a conversation face-to-face, and that we can bring to you our experts no matter where they are. Today, it is my privilege to present our expert in analysis, Alejandra Marcos. Alejandra holds a bachelor's degree in business administration from the Anáhuac University. She also enhanced her preparation at Harvard University through specialized courses on financial markets. She is currently Director of Economic and Strategy Research at Intercam Bank. Additionally, she actively participates in opinion forums such as El Financiero, Bloomberg, Gin TV, and an opinion column to be printed in El Financiero. She has given lectures on the global and Mexican economy outlooks at different forums. Previously, Alejandra Marcos was the Economic and Strategy Research Deputy Director, where she was responsible for investment recommendations and directing patrimonial strategies to advise the institution's diverse clients. Marcos has worked at different financial institutions such as Banorte and Actinver, carrying out the same assignments. She also has experience as an academic at the Anáhuac University. And now, with you, Alejandra Marcos.
Thank you, Eduardo, and good afternoon to everyone, and thank you for logging into the call. I'm not sure if I can see my presentation for today. Well, I think we have some technical difficulties, but let me start without the charts, telling you what is going around these days in sense of the economic perspective outlook in terms of COVID-19. And let me start telling you some first good news. The good news is that for some countries, for example, Italy, Spain, Germany, and even the United States, we have been a downward trend in the numbers, in the new numbers of COVID-19 in everyday new cases. Of course, we haven't seen that worldwide this number is going down. There you are. These numbers are not going down worldwide because we have mixed results. And starting with the numbers of COVID-19, we as of yesterday, we have 5.6 million cases around the world. New daily cases are around 90,000 in the world, and we have, as I told you, mixed results. In developed economies such as Italy, Germany, Spain, even United States, new cases no longer show exponential growth, but in the contrary, emerging markets are showing higher growth rates every day. We expect to see the flattering of the curve in the next 2 or 3 weeks. Now, the epicenter of the epidemic is Brazil and Russia. The United States and the developed countries in Europe no longer show exponential growth. However, the United States is still the most affected country all the world, and we have in that country more than 30% of all cases. Second in line, it's Brazil, that recently just showed a very steep upward trend in new daily cases. What the new COVID-19 has made to the world is that it has made that the economies show a sudden stop in global economy, because most of the governments have carried out social distancing measures. Even though these developed countries that I have already pointed out, in the last few weeks, they have been partially reopening the economy. The thing here is that there's a lot of uncertainty going forward because we don't know the final impact and if there will be another outbreak in the following months or even in autumn when all the economy is reopened in most of the economies. In this chart, we could see that we have mixed results. For example, you can clearly see that in the United States, that curve has been flattering, but in contrary, in Mexico, India, the trend is clearly going upward. In these charts, what I'm trying to point out is that the new cases around the world have been mixed because the virus has arrived to each country in different times of the moment. So we have that the United States is gradually open. Actually, almost all the states in the United States have partially been reopened. But in contrary, Brazil, Russia, and Mexico, even India have new daily cases with an upward trend every day. What had caused the COVID-19 around the world is the new recession. And this recession, it has not been seen in the world for almost 100 years. Let me explain. In China, for example, we have already seen the numbers for the first quarter of 2020, and the contraction in the GDP was around 6.8%. This fall in the GDP has not been recorded since we compute China's numbers. For the Eurozone, the GDP contraction was around 3.8%. Also, the biggest contraction that has been recorded since we know the Eurozone. For the US, the contraction in GDP was around 4.8%. But the thing is that for the second quarter of this year, we will see a contraction of more than 40% this year, since the distancing programs have been taking place in the recent months. And to give you a quick example, unemployment rate in the United States last month totalized 14% in the month of April. We expect in the month of May and in the month of June that unemployment rate will reach more than 20%. To give you a quick example, the jobless claims in the United States has totalized more than 36 jobless claims. This means that every job that was created in the last 10 years since the financial crisis of 2008 and 2009 had been lost in the last 6 weeks. The International Monetary Fund, around one or even more time ago, 1 month ago, launched its estimates for global economy. And it thinks that this recession will be the biggest since the Great Depression in the last 19,000. For example, it estimates that the world will have a contraction of around 3% in its GDP. For advanced economy, that contraction that it estimates is for 6.1%. And for the United States, it's around 5.9%. Emerging markets economies will drop for 1%, and in Particularly in Mexico, it estimates a contraction in its GDP for 6.6%. To give you an example, this is an unprecedented crisis. This will be the most worst recession since the Great Depression, and even more severe that we have the one that we already looked in the last financial crisis in 2008-2009. The shock in the supply chain is very considerable, but the main thing is that the shock in the demand will be even great. The loss in the GDP due to the health emergency is accompanying with isolation measures that we have not seen in the last 100 years. But however, we expect, or the International Monetary Fund expects that it will be a rapid recovery in 2021, and it expects that the growth for the GDP globally will be 5.8%. However, also the International Monetary Fund expects that will be a great uncertainty. We don't know how long these epidemic circumstances will last. And these estimates, of course, are held to revisions going forward. The reaction in the markets have been a lot. For example, the fear index, the VIX volatility index, has reached in the recent weeks when the outbreak began outside China, they reached levels around the financial crisis from 2008-2009. Of course, it had been gradually diminishing because there have been launched many news regarding reopening of most economies. And for example, stock markets have had a recent recovery, especially the S&P 500 has had a drop of more than 35% since its minimum point, and actually it regains more than 50% rally in the last recent weeks. For the Mexican peso, since we have an opening economy, peso is the most heated variable in this kind of shocks, external and internal. And we have had a depreciation at the most of more than 20%. In terms of gold, since it is one of the most treasures and it is considered as a safe haven, the gold has been rallied for the last couple of weeks. Since we will have an extraordinary recession worldwide, some economies have put in place some monetary and fiscal stimuli that haven't been seen in the last years. For example, in the United States, the fiscal package will be around $3 trillion. To give you an example of how much this represents in terms of GDP, it's 15% of the GDP. This is the largest fiscal package known year to date, and it will consider helicopter money. This is that the United States government will be carrying out some aid directly to families and to small companies. For example, every citizen in the United States will receive a direct check for $1,200 per each citizen. This has not been seen in the history of the United States. Of course, we expect that the fiscal deficit will grow a lot, even to $1 trillion in this year. Also, the Federal Reserve has also carried out a lot of monetary measures in order to be less the shock in terms of the economic hit that the COVID-19 will do to the economy. And for example, it has already cut the rates for 0%, the lowest recorded rates ever in the history. Also, it has carried out an unlimited quantitative easing. Unlimited, this means that it will be buying every commercial, not every commercial, but every sovereign paper issue as long as much that the economy will be needed. And also, the Federal Reserve has also carried out some swap lines with a lot of central banks, including Banco de Mexico, to lessen the liquidity of dollars all the world. Of course, all of these measures are carried out in order to mitigate the shock that will have the United States economy for this year. Since we estimate, and everybody's estimates is around that the GDP will drop around 5 to 6%. But the rest of the world has also carried out a lot of stimuli. For example, central bank in Europe has also taken place another QE, the Bank of England, Bank of Japan, and of course, Banco de Mexico has also had a place in Mexico. For example, it had already cut the rates in order to put it to 5.5%. And it announced also additional measures to increase the credit to families and to small companies in Mexico. Actually, monetary stimuli carried out by Banco de Mexico, it's around 7,500 billion pesos, and it represents around 3.3% of GDP. And today, Banco de Mexico just released another communique that tells us what we think that the economy will behave for the rest of the year. And actually, he tries to draw three different scenarios. The first one is that the Mexican economy will have UV behavior. This means that for the first half of the year, it will drop, and then we will have a recovery for this year, the remaining of the years and 2021. This means that the Banco de Mexico, it expects that the economy will drop for 5.6% this year, and it will recover around 4% next year. Another scenario, and I think this scenario is the one that it has been drawing not only the Banco de Mexico survey, but Citibanamex survey. It's a very high drop in the GDP. It will contract around 8 to 9%, and a recovery to the fourth quarter of this year and in the 2021. And the last scenario that I think it's the one that is less optimistic is that we will have a U-shaped recovery. And this means that we will have a contraction this year of around 8.3%, and then next year we will have a contraction of 0.5%. I think that since the recovery that we are expecting of the U.S., probably the most probable scenario will be number two, the one that Mexico will have a sharp drop in its GDP, but then a recovery in the fourth quarter and in 2021. For Mexico, we already have the final numbers of the GDP. We had a contraction of 2.2%. We have already had 6 following quarters with a contraction. And the leading indicators for manufacturing and for non-manufacturing activity shows that Mexico is leading to a big recession, at least at the months that we know that it's now the leading indicators for May. So what we are getting is for a big contraction, and we have to remember that the Mexican economy had already had a drop in 2019. Mexican economy didn't grow last year, and we are now in a structurally very low level growth in terms of GDP. As I mentioned before, the Banxico survey accounts for a contraction in GDP for around 7.10%. The main thing here that I would like to point out is that, for example, in the month of March, that is the last survey that we had, expectations were around 3.5% drop in the GDP. And in the month of April, just 1 month after the first drawing of this contraction, most of analysts think that Mexican economy will drop around 7.3%. Of course, we have already known that many other brokerage houses estimate a drop even of 10 or 20 or 12% for Mexican GDP. But the main thing here is that we will have a very high drop in GDP this year. I'm not sure if it will be 7 or 10 or 12, but the thing is that Mexican economy will drop as most of the main economies worldwide. For the exchange rate, for example, this Banxico survey expects that it would close around 23 pesos, and the inflation going down from almost 3% to 2.90 this year, by the end of the year. Well, what do we think? What do we expect for the rest of the year? We expect that the GDP will have a contraction of 7%. The inflation rate will go around 2.85%. I missed to mention that in this release that Banxico launched today, it expects that the inflation rate will go from 3.2 to 3.5%. And later on, I will go deeper in this subject. But the contraction in the GDP, it's mainly driven by consumption. We will think it will drop by around 5%. It will be affected by remittances that, even though the last month went up and it recorded a very high level of remittances, since we expect a drop in the job level in the United States, we think that remittances will go down by 10 or 12%. In terms of jobs in Mexico, we expect, of course, we are in this matter, we think we are very optimistic, but we expect a loss of 370,000 jobs in 2020. And in terms of private investments, we think it will drop to double digits, around 14%. This is not only driven by COVID-19 and the great lockdown crisis. This is also due by some public policies that have been taking place since the new administration came up. For public investment, we expect a drop due to fiscal discipline, and in exports, since we expect a drop in the U.S. economy for around 6%, we think that it will be dropped by around the same measure, around 5.5%. Of course, the competitiveness of the peso will partially offset this drop in the demand in the United States. For inflation, as I mentioned before, we think it will be around 2.85%. It will be less than the objective of Banco de Mexico. It will be affected by devaluation pressures, but of course, we have seen a drop. Even though in recent weeks we have seen a recovery in oil prices, we will still have lower energy prices this year than the ones recorded in 2019. For reference rates, it's important to mention that we expect new cuts. The document released by Banco de Mexico today also suggests that easing monetary measures will be taking place this year. So we expect that the reference rates will go down until probably 4.75%, since Banco de Mexico has enough room due to monetary easing programs worldwide. We have to point out, for example, that Latin American countries have real interest rates in zero and in negative. And since we have very high interest rates, Banco de Mexico can also have lowering rates by the end of the year. For public finances, we think that since the new government has already appointed and has always appointed to fiscal discipline, we think that no fiscal measure will be taken place this year. We have public finances structurally weak. We will have this year less tax and oil revenues. We will have a lot of spending going to Pemex, and still we think we will have a very low current deficit for about 2 to 4%. But of course, we have some things that could be carried out by this government. For example, we have access to external funding. We have the credit of the International Monetary Fund. We have the credit with the Federal Reserve. We have the international reserves going up to $806 billion. So we have enough room. And by any means, I want to point out that this recession, it's not due to public finances. It's not due to the imbalances accounts in Mexican government. It's due to external factors. And since that, we think that even though the Mexican government will not take place any aggressive finance program to reduce the hit in medium and small companies, and it will not reduce the hit in jobs, probably the thing that will carry us out to a great growing for next year, for example, is the U.S. economy. The growth of the U.S. economy will carry us that probably we will have a growth in GDP in order of 2.5 to 3% next year. Regarding to credit ratings, what we saw in the last months is that we already have cuts in the credit ratings of 2 agencies. Pemex no longer has investment grade. For sovereign credit papers, we still have investment grades for each one of the 3 agencies, but we cannot believe or think that we will have revisions downwards going forward in the next probably 1 year or 1 year and a half, since we will have a lot of investment going to Pemex, and since we will have a growth going very slowly in 2021, we could not think that, for example, Moody's or S&P will have further cuts in sovereign debt for Mexico. However, this is not pointed out in our main scenario, and what we think is that we will have further cuts, but not a loss in investment grade. For the peso, for example, we have seen at first a depreciation of more than 20%. In recent days, in the last week, actually, we had an appreciation of more than 5%, but we have to think that Mexico is an open economy. The peso the currency actually is the most variable that receives all the shocks, internal and external. And this is the first things that adjust to these shocks. Also, we have to point out that peso is the most liquid currency between all emerging market countries, and it's usually used for hedging. So the movements that we see in the peso going upwards and downwards doesn't necessarily reflect the health or the main stance for Mexican economy. A higher depreciation risk, we have to point out Pemex capital outflows because, for example, in the month of March, we saw capital outflows in Mexico for around $7 billion. For all the emerging markets, these capital outflows were for about $100 billion. And of course, we have seen that these outflows were continued in the month of April, but not in the month of May. Since the month of May, we have already settled, or we have already not received or not seen a lot of capital outflows. So I have already told you that in the last week, the peso has already appreciated more than 5%. And we think this is due not to a better Mexican outlook, but it is due that it has already been changes in the outlook regarding to COVID-19, since most of the economies, developed economies, have been reopening. And we also have seen a lot of more appetite for risk. We have seen increases, rallies, more higher prices for stock markets and for all currencies. The movement of the peso was not the only one. All of the emerging markets saw a rally in the last week, and even the dollar has loose market between all the hard currencies. The thing here is that we think that in the following months we will have a lot of volatility. We can have another outbreak, as I pointed out at the beginning of this conference, and of course U.S. election that will hit or that could hit Mexican currency. By sector, we will have a differentiated impact. I will not have a lot of time here, but we will have some companies that will have a positive impact, some ones that will have a neutral, and some ones, of course, that will have a very negative impact. To point out, self-service stores, food, beverage, telecommunications, pharmaceuticals will be the winners. And in the other hand, consumer discretionary department stores, aviation, hospitality, entertainment will be the losers. In terms of the automotive sectors, we have seen a hit it's been very hard. For example, the production in April fell more than 99%. Production in Mexico, almost 88% goes to exports, and these exports go more than 78% to the U.S. We saw a contraction in car sales in Mexico for 60%, and these changes we already saw before COVID-19 due to technological changes. Since the automotive sector will be the ones that open before all the economy that will be open in Mexico, it will have a better recovery. But still, we think the automotive sector will fall for around 40% in terms of production this year. In terms of tourism, it's another sector that will be hit very hard of this COVID-19. But we think, as we already know, some hotels will be open in June, for example, in Cancun and Riviera Maya. In aviation terms, we will see new consumer trends worldwide, probably the youth and the ones that are trying to approach more of the promotions will fly first. We will see a first recovery in domestic passengers this year, and probably international passengers will eventually be held by this weekend of the peso. Here in all of these charts, what I am trying to point out is the trajectory that all the passenger traffic in terms of domestic and international traffic will be drawn for this year until the following years, till 2023. And what we think we will see is a great fall in terms of passenger traffic for all these groups: Cancún, Puerto Vallarta, Los Cabos, Guadalajara, Tijuana, Monterrey. And then we will see a continued recovery from the beginning of probably April next year until 2023. The tourism sector, we have to point out that there are 156 destinations that have completely closed their borders. We have been hearing these days that these borders are gradually reopening, but it will be still a few months before we have a completely open air in terms of travel. We have already known the measures and proceedings for operations in the tourism sector. What we have already looked is that there will be a lot of sanitization procedures. There will be less available space for customers. For example, restaurants will only operate by 30% of its occupancy, same as some hotels. It will require a lot of measures in sanitization. It will require some distance between customer and customer. And to give you an example, for the first quarter of this year, revenues in the tourism sector decreased for 14%. But we have to point out that this only accounts for the last 15 days of March. The revenues will fall sharply in the second quarter of this year. And what we've seen is that passenger traffic have decreased for more than 90% in the month of April. What it's more important to point out is that consumer confidence, it has been already hurt, and this will take time to recover. And these are my final remarks. I just want to point out how we'll see the outlook for Mexican economy. We will see a drop around 7% this year. We will see falling interest rates in Mexico. We will see inflation also going down, and we will see the exchange rate probably going from 22 to 23 pesos by the end of the year. And I think this will be all, and I'm ready for the session of question and answers. Santiago, if you may.
Thank you, Alejandra. I remind the public that we are taking notes of your questions. You can post them in the Q&A section on the right of your screen. I'll take notes of them, and I'll ask the questions to Alejandra on your behalf. So we have a couple of questions. The first one is regarding PEMEC. The agreement is coming into force next month, in June. And do you think the coming into force of this new agreement, new trade agreement, will improve the outlook for the Mexican economy? Or will it matter under these circumstances of COVID-19?
Thank you, Santiago, very much. Yes, a really good one. Let me start that I think that in the short run, probably we will not see a better outlook since that the MEC has already placed in or been signed or has already been taking place. But of course, what has done the TEMEC for Mexico is that it will have an integrated economic border or no border with the United States, and Mexico will have a better competitiveness outlook for all the foreign investment in the following years. So we think that in the short run, this will not change a lot our outlook, but in the next following years, of course, we will have, it is supposed that we will have much more investments due to our border with the United States and the outlook that this may point out due to that the United States will have a better recovery in the following years.
Thank you. The next question has to do with the exchange rate. During your presentation, you were talking about the peso's appreciation in the last few weeks. What do you think has driven this appreciation, and do you expect it to continue further, or what can we expect?
Yes, I think it took us all by surprise. This recent appreciation of the peso, I think it's due mainly to a change in expectations due to the reopening of some developed countries. I think it's very hard to think that we will reach a peso of 19 in the following weeks, as we had before the outbreak of the COVID-19. But we have to think that the peso is still very undervalued. I think that probably for the next following months, we will have another time of volatility. We could reach even though levels of 25 that we have already reached in the last couple of weeks, since this recent appreciation of the peso is due to a change in expectations and a more appetite for risk in terms of currencies. But what I expect is that probably it will be around 22, 23 for the end of the year. I'm sorry.
Thank you. We have a question about digital currencies, cryptocurrencies. We heard a few weeks ago news about China implementing some of this technology in the country. We have a very precise question. Do you expect that we are going through a structural change towards a new world order of money, or how can we read from the markets today about digital currencies and so technology?
Yes, that's a good one also. A few weeks ago, we had a lot of rumors going through the markets that China was going to carry out this digital currency, and what we think finally is that China is going one step ahead in terms of the digital space, the digital area. It is a small exercise going in, I think, 4 cities of China. I think that China doesn't want the yuan to be the leading currency in the world. I think the dollar will still be in the next probably 20 to 30 years. And what we expect regarding this news is that China is just making these flows of currency in a very much more efficiency way. In other words, what I'm trying to say is that China is trying to go one step ahead in terms of digital currency, but it is no way going or trying to give up the dollar leading currency in the world. It would like to try how it works, for example, to make payments to Russia or to Venezuela or to any other country that he would like to make any type of commerce around the world. And since, for example, in Switzerland, the SWIFT lines, if you want to make a SWIFT in terms of dollars, it has to go through Switzerland, and it actually forbids to make some exchange with some countries. I think China, what it's trying to do is to have a more effective exchange currency in terms of commerce. But we will have that, or probably the dollar will be the leading currency for the following years. And the only thing that it's China trying to do is this, doing more effective its currency trades between all the world.
Thank you. The next question has to do with the automotive industry. Do you see shifts in global supply chains that benefit Mexico in the medium term and long term?
I think that in the long run, that will respond to changes in technological requirements. For example, what I was trying to tell you is that before COVID-19, we have a change. We have been watching a change in these technological issues. And for example, in Germany, that has been the leading automotive country in the world, it has been struggling in this part. Since we have had a change and a shift in some parts of the cars. So what I'm trying to say here is that if Mexico really tries to compete with low cost of labors, for example, and very competitiveness investments, worldwide, probably yes, we will have a benefit since the MEC has already been signed. But what I really think is that it will depend in changes in factories of technological issues that will be suitable for the following era and for the following cars that will be made for the future.
Another question made through the chat. Do you still consider that cash is king under this environment? So what are your thoughts or your recommendations for investment allocation in general?
Yeah, also that's a very good one. We have been taught that, of course, cash is king. And in terms of volatility, and that we now have seen a lot of rallied in some stock markets, for example, and rallied in some currencies. What I think is that you have to place in many sectors and in many investments your whole investment. What I'm trying to say is that you don't have to put all the eggs in the same basket, for example. And yes, of course, cash is king. You have to have a part in cash in order to catch the opportunities. Stock markets in the US are no longer an opportunity. Probably stock markets in Mexico and some names are very undervalued could be a chance. Current now at this level, probably the peso could also help with a little part in order to have this hedge and thinking that we will have a depreciation in the following months. And of course, you have to also have one part in rates I personally believe that Mexican rates offer, due to its carry trade, the most competitive rate in the world worldwide. So what I think is, yes, one part in cash, one part in very undervalued names in the stock exchange, and one part probably in fixed rates. But of course, these have to do with the profile of the investor and the term of if investment, if it's going in the short, in the medium, or in the long run. Of course, the ones that are here right now, hearing us, could have a reach and a call to its personal banking, and they will recommend the best for its profile.
Thank you. So we paint like a bit of a grim outlook for the Mexican economy, and we are being asked about the banking sector in Mexico. We're being asked precisely if it's safe to have savings in Mexico. Can we expect a deeper crisis that affects the banking sector in Mexico?
Okay, yeah, also a good one. No, the most simple answer, no, and not for the moment. The main difference between this crisis or this recession and the last one that we had in 2008 and 2009 is that back there we had a financial crisis. This is an emergency sanitary crisis, and these days, all the banks are well capitalized. I think all the system as a whole is very well capitalized. Of course, we will think that NPLs will go high, and some companies will not resist the shock of COVID-19, and they will go bankruptcy. But I think that actually not here, not everywhere in the world, we are thinking of a financial crisis. And that would lead in a bankruptcy or a needed of help in the banking system.
Thank you, Alex. I'm going to move to some questions about the virus. They are asking, have you modeled a second wave of COVID-19? How will it impact the economy? What are your thoughts on a very possible or probable second wave of the disease?
Yes, I think not ourselves, not everybody, not anyone in the world has already tried to incorporate or draw another outbreak of this COVID-19 in the following months. If this actually becomes a reality, I think that these projections, for example, of the International Monetary Fund, will be not dropped by 3%, but a much higher drop in the worldwide economy, in the United States, in developed economies, and in emerging economies. I think that in the recent days, very optimistic sentiment has driven this rally in stock markets, and we have a good chances to believe that social distancing has already carried out good terms for at least developed economies, and for example, that probably we will have a vaccine as soon as the first quarter of next year. So no, the actual answer is no, we haven't drawn another outbreak, but I think neither anybody else in the market. And this, of course, is the higher risk for our expectations.
Thank you. And the last question has to do with the real estate sector. What are your thoughts on the real estate sector? Is it good to invest in that sector now in Mexico with the depreciation of the dollar against the peso? Do you still see attractive the sector?
Well, let me try to respond this one in two ways. The first one going through real estate as is, as is. And I think that we will have, or we will see a lot of opportunities of people and companies that are going to have or trying to have liquidity by selling assets. And those assets probably will be real estate. And the other one, in the other hand, we have rates in Mexico. And these rates, I think that they have been hit very hard. I have a positive outlook in most of them. Of course, the ones in shopping centers and in hotels are the less attractive for me nowadays. But the ones that are very diversified, you will receive a dividend that has been up to 12, 14% since the drop of the prices of these stocks in the Mexican market. And I think that those are good opportunities, especially for long-run investors with high tolerance to risk. But I think those assets are attractive at some point.
Well, do you think the airline industry will lose some of its companies to bankruptcy in the US, Canada, or Mexico?
Well, we have already seen bankruptcy filing for some companies in, for example, Colombia, and LATAM has already filed its bankruptcy. We could not discard that this is a possibility. In the United States, airlines are one of the most courted companies, and the government has already took place some of these extraordinary fiscal packages to these companies. It is, of course, it is possible to see bankruptcy in the United States, in Canada, but what I think is that these bankruptcy filings are only in order to put order to all the loans that this company had already taken before COVID-19. In other words, they make these payments in order. So, of course, we will not like to see any other, but we could not discard that they will be taking place. In Mexico, since we don't have any fiscal package, and not especially to airlines, we cannot discard that one, two, or some other airlines file to bankruptcy. Of course, this will hit a lot more our scenario for tourism.
We have a question about the investment grade rating in government debt. You said Intercam is not expecting a cut of the credit rating. So how is Intercam positioning itself with that outlook? Why are you so confident Mexico is not losing the investment grade?
Yeah, that's also a good one. I could not put the chart one more time, but let me explain and be more explicit about this issue. Fitch is the only credit agency that we have just above investment grade. And Fitch is the agency that our outlook is stable. In other words, we do not expect that we will have further credit downgrades in the following at least 12 to 18 months. In contrary, Moody's and S&P have much more notches above investment grade, but we have a negative outlook. In order to lose investment grades, every other agency, well, Fitch, Moody's, and S&P will have to cut credit ratings in more than one notch, and in the following 12 to 18 months. And that's why we do not see this happening in this time line that we have already drawn. What will happen in 2 years and in 3 years? Well, it's very hard to draw that scenario due to the things that are changing a lot. Of course, we cannot discard that we are losing investment grade in the following years, but we do not think that we will lose investment grade for at least the next 12 to 18 months due to the credit ratings that we have currently and the outlooks that have already drawn by credit ratings.
So I think we don't have any further questions, so I'll leave you the microphone for closing remarks.
Thank you, everyone. I think that the outlook for the Mexican economy, it's not as brilliant and as we like to point out. Of course, these times are called for opportunities, and we want to make sure that we are close, and we are close enough to you in order to make your choices as best as you can. And I will turn the word to Eduardo for the final remarks, and thank you very much. Eduardo, is your call. This one is on you.
Thank you, Ale. Very interesting. For me, the survey, the survey of Banco de Mexico, the difference between March and April is outstanding. So we would expect that the following surveys will also bring new information. I believe it's a time for us to look closely to the economy. So thank you very much, Ale, and thank everyone who connected to this webinar. We will continue to be close to all of you. And please, if you have any questions, come to contact your executive. We will be glad to assist you.
Thank you.
Thank you very much.